Gentlemen, K here with the Traders Club. Welcome to the market update. Today we're going to be talking about Spider, Qs, Diamond, and the Russell 2000, and we'll call it a day. Let's start with the weekly chart first, and we'll go from there. And let's kind of follow up with what we've been talking about the last several weeks. Let's actually talk about, first of all, we talked about last week this three white soldiers candle there, and you can see right there. So you got the first week's bullish candle, and we saw the follow through, and then we saw another follow through, and then with those consist of three candles, we had three white, what is known as three white soldiers. A lot of times when you see three white soldiers, you're going to see the market continuing to see a follow through to the upside. So now you can see that we are now above this week's bearish candle. I mean, this whole down move happened in just 1 week, and that all of that has been reclaimed on the fourth week here and then some, right? So this week, obviously this candle was bullish, piercing candle, right? That candle pierced more than 50% of previous week's body, right? The bearish candle's body, right? That right there, that's where it pierced. That's more than 50% of its body, and that's what is known as bullish piercing candle. And obviously any of these candlestick analysis, you need to see a follow through before you can say that it is, you know, it is playing out or it is valid. And so we did see a second week's follow through. We did see some volatility, see that lower wick there, and then a third week. So definitely we saw the 2 weeks of follow through. We can see that now that bullish piercing is playing out. And then to make things worse for the bears, we did see another thrust above this long bearish candle, making it into consecutive fourth weeks of follow through. And now we can say that this bullish three white soldier candle is starting to confirm with that candle. And you can kind of observe the fact that this candle seemed much more confident than any of these candles. I mean, this candle is longer and more lean, and then this candle does not have that lower wick or some of these wicks here. There's those wicks obviously represent some volatility throughout the week, but pretty much this week or past week was pretty much smooth, grinding higher bullish day throughout the whole week. Let's zoom out and kind of look at this here. When you zoom out here, and this is a 200 VWAP that I have, moving average that I have here, and you can see that this moving average was acting as resistance back in 2010, and then 2011 turned bullish, 2016 turned bullish. We're back here in late 2018. This was the Christmas Eve, and that's where we found support there. And what I like to say is that this 200 VWAP has impressive resume, because you can see how that's the level the price has been respecting, right? So like chart style says, trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We actually don't have a clear signal that the trend has been reversed. We have certain uncertainty as far as the price action is concerned. We did make new low. We did break this recent support. But as of today, we can't say that we're in a downtrend. We're in a bear market. Obviously, we are in a downtrend when you look at things in a shorter term. But when you look at it in a primary term, we still want to conclude the fact that we're still in an uptrend, right? And you guys remember my recent blog post that I wrote about that. Where is it? Let me just find it real quick so we can talk about it here. So yeah, you go to twotradersclub.com, the indices trend line, and you can have to see that we are still in a primary term uptrend, right? We're still in a prime. This is what you call fan lines, and a lot of times trend works in this way. So you said there's one trend line was cultivated, and then it cultivates second trend line. It's almost going in a second gear, right? So you go through this trend line, and then a second gear appears, and this goes on a second gear, and then it goes to third gear, and that's what you call fan lines. Actually, on the spider, we're still respecting same trend line from all the way to 2009 versus where on the Qs, we're actually getting into a different angle. It's going actually faster now. Looking at a primary term trend perspective, the trajectory of this move is much faster than this move here. Again, that's how the trend gets aged, right? Look at the Russell 2000. We actually came back down, retest the same trend line. Diamond is a little bit more complicated looking trend line, but it came down and retested this. So it looks similar to Qs, where Diamond is moving a little bit faster than what it did in 2010 through 2016 there. Semiconductor is actually now retesting prior resistance as a new pivot. So now that's what I call rising pivot. So basically what this is, basically you have this rising channel, right? And this, you see this happening a lot if you actually look at things on long term. Actually, something like this did happen on the diamond. On the diamond, if you actually go back and look at your monthly chart, you see a megaphone pattern where diamond broke out, Dow Jones broke out, and retested the megaphone pattern as a new support before moving higher. And that was 2016. And that's the video that I've done. Dow historical breakout, new secular bull market ahead. That's the video was about in early 2016. Semiconductor is now acting in a similar way like the Dow in 2016, where you can see that you see this rising channel. We broke out of it. We're now retesting it. I believe it's going to continue higher, right? And you can see the transport's respecting that support there. Finally, this is banks, right? The banks, it is slightly now forming and cultivating this fan line. So then banks is also this trend is starting to be aged and starting to get stronger and faster, where you expect the banks to kind of start to cultivate trend in this fashion, where we may even see another trend line like this. So this is how trend gets aged. This is how trend gets stronger, and that's how the trend moves faster and faster. Like, think of it as first gear, second gear, and third gear. So you can see, I mean, clearly when you look at this in a long term, trend is still valid. And we're talking primary term. So let's continue to look at that, and let's give benefit of the doubt to the buyers in the long term. Let's look at a kind of shorter term, intermediate term perspective here, right? So you can see this is the neckline, right? So you can see this was a prior support, right? Neckline of this potential head and shoulder formation. And then we broke below it, and we got right above that just on Friday. We gapped up here. This is some kind of island reversal. I wish it was kind of a bigger gap. I mean, my chart showing the wick there, there's no wick. If I actually go to 65-minute chart or intraday chart, there's no wick there. There's a little bit of mistyping or something like that. But I wish the gap was higher, a little bit higher. But it's a small gap, so it's not gonna impact the market in a huge way, because we already seen this 14% move. And the gap was, I think, only like 0.5%. I think it would have been better if it was like maybe a much bigger gap, like maybe a 1% gap or 0.8% gap. So it's a smaller gap. I wouldn't be surprised to see this incoming right back down and filling that gap. But I think after that, it's going to go right back up here. 280, right? This is a 280. I think 270, 280 is going to be a congestion zone. I think there's going to be some complication there. Because I think a lot of people are going to be watching that 100 or 200 SMA. And a lot of people who have a bearish thesis, right? They think the recession is coming. They think the bear market is going to start. And a lot of people are probably going to think that it's going to go to 2 or 100 SMA and then coming back down, making new lows. Because obviously 100 SMA did act as resistance on this gap, on this move. Right, bulls when we're trying to gap back up, that 100 SMA did act as resistance. We saw a plunge. So I think a lot of shorts are possibly still waiting for that plunge. And I think there's also people waiting for a retest of the lows. I don't think that's going to happen. I think the chance of this thing retesting is a very, very slim to none. And we made a 14% run. I think if we're gonna retest the lows, it would have happened here in 247 like this. It would have been, that would have been more likely scenario like that, and then something like this. But we saw this shenanigan though here, and I think that's what a lot of people were expecting. You saw that. We saw this move, we saw a gap down, and we saw a plunge on that day. It was like 2% down day, and then this thing gapped right back up and blew right through the gap area. I think that's when the minor term momentum has shifted without seeing that double bottom or the retest of the lows, because I think a lot of people are expecting the retest of the lows, right? So a lot of short term, I think shorts got trapped there. I think there's a lot of people are still kind of left hanging, waiting for a retest of the lows, and retest of the lows is probably not going to happen, not after a 14% move like this. And so I do believe that it's going to continue to go higher. We got 100, 200 SMA, and then we got 280, and I think a lot of people are thinking that above 280 is potentially, you know, a safe, quote unquote, safe zone to go long. But I think a lot of people are still going to be scared, because last time when this thing did make new all-time high, this thing plunged. So they're thinking, well, what is it? How can you say that this time it's not going to do the same thing where it makes new all-time high and plunges again, right? So I think majority of market participants at this time is either wiped out because a lot of people chased it, this 2018 movement. I talked about last couple weeks, that a few weeks ago or something like that, that, you know, lots of hedge funds, hundreds of hedge funds closed its doors as of December 31st, because a lot of those hedge funds were bearish in 2016, was not able to participate in 2016 and 17 move. And finally, when 2018 correction occurred, because obviously you can't chase this kind of move here, right? Not only hedge funds, but most market participants was either bearish or cash or just scared and was not able to chase 2016 and 2017 move, right? And I think something similar is going to happen. I think we're going to have a great year in 2019 and 2020. But similar to 2016 to 17 move, a lot of people are going to miss out on it, right? Because a lot of people are either going to think that crash is going to come, recession is going to come, or a lot of people already got knocked out. A lot of people already got wiped out on recent, this 20% plunge. And a lot of people, and a lot of, you know, people either went cash or got stopped around 250s and 260s. You know what I mean? And for them to go back long, they need a safe, you know, safe level, right? There's no, market is not going to give you quote unquote safe level to go back long. You know what I mean? I mean, you want to be bullish when the public is most pessimistic. And that the best time to buy is when the market is most pessimistic, and you want to buy the fear and you want to sell the greed, right? And you hear all these things, but when you actually got to walk that, most people just gets petrified and paralyzed and not able to do anything. And so I think once you missed out on this move, as this market continues to move, which I think it will, I think the market is in this savvy, mysterious ways are not going to give you all go ahead and this is a perfect level to go long, because I mean, we're already made a 14% move. By the time this thing gets to 280, that's a 20% move. I mean, you really want to go full on bullish after 20% move. It's gonna be difficult, especially if you close out all of your positions down here and you want to go back long. And then some people say, well, I'm going to slowly get back into it. Well, as you slowly get back into it, you know what's going to happen is sooner or later, we're going to see that bigger correction, like 5 to 10%. Because 5-10% is given. It's going to give you the here and there. But I don't believe we're going to see another 20% correction like this at least for a couple years. So what's going to happen is market is going to continue to grind higher. Most people are going to miss out on that move. A lot of people are cash right now after getting stopped out with loss. They're going to continue not able to participate because the market is not going to give you that all quote unquote go ahead move. It's going to be difficult to find that perfect, you know, let's go full bull on bullish now type of movie. And a lot of people thought this was it, right? This was really, though, good cultivation of the base. You know, we saw that bullish move, we saw about 12% correction, and then we saw that base. And so I think a lot of people also got stopped out here because they thought, well, that definitely is, you know, quote unquote, safe level to go long, right? That is the green light. So a lot of people who missed out on 2016, 17, 18 move, they flipped bullish in late 2018. A lot of hedge funds was not able to perform last couple of years. Full-blown bullish into late 2018. A lot of bears who did not able to participate in 2016 and 17, 18 move because they're so bearish in 2016 because they're so scared. They flipped bullish in late 2018. A lot of cash people who are just waiting and waiting for a bear market to come. It never came, so they flipped back bullish. Finally put their money to work in late 2018, and market came behind them and just knocked them out cold, and it wiped many people out. Now that market wiped many people out, it is finally ready to stretch its wings and make a huge move. I believe the market is going to continue to grind higher. We're going to see some complications here and there on a daily basis, but I think it's going to continue higher to 280. And I think, you know, what I want to see is something like this. That's what I want to see, right? So we have left shoulder, head, and a right shoulder, and I'll buy more here, right? And then this thing going higher. But I kind of have a feeling that market kind of knows that that's what a lot of people want to see. So what could end up happening is this thing going up and then possibly doing something like that, or going up and then maybe a little consolidation and then go higher. You know what I mean? But I think trying to time it in a perfect level, it's not gonna be easy. And the market, as market always do best, is leave many people behind, right? Well, I mean, who do you know on Twitter or StockTwits or anywhere, blogs, whatever, who fully rode from early 2016 to all the way to late 2017? Who do you know? Not many, probably none on social media, right? You don't know anybody who actually ran that all the way from 2016 to 2017. Something similar is going to happen next couple years. It's probably not going to be exactly same as 2016 and 17, but it's going to be difficult, and the market is going to continue to thrive, and most people are not going to participate in it. And this is how the market works in a primary term uptrend. In a bull market, just because you're in a bull market doesn't mean everybody gets rich. Only small people who know what they're doing, the remnants, a small group of people know what they're doing, are going to make, are going to be rich, are going to build wealth and accumulate wealth over time. But majority of people always being scared that crash is going to come, and always getting stopped out at the wrong time, always getting in at the wrong time, they always get punished. There's always some shenanigan happening because they're operated with fear and impulses. You know what I mean? So let's go to Qs here. Very, very similar look here. Obviously, this is the neckline, right? We came down, we're going right back up here. We got some congestion zone in this vicinity here, 180, 170-ish. We got 100, 200 SMA. So those are the levels. I think we're going to see some contraction of the price and maybe some slowdown in the short term. But I do think it's gonna continue to grind higher and past 180 on the Qs as well. Diamond also, we can see that we do have Diamond actually has a better looking gap than Spider. It was, I think, a bigger gap up than Spider. So that's still an island reversal there. And this was the neckline, right? This was a prior support there. We got support there and here. Again, a lot of people got stopped out somewhere here in this vicinity, somewhere here, 240 and 235-ish in this vicinity here. And as this thing continues to go higher, and this is what I'm saying, I mean, by the time Diamond goes from here to here, that's already a 20-21% move, and majority of moves already been made, and you're trying to chase that. Majority of people are not going to chase it after this huge move. But I do think that it's going to continue to go higher. We do have 100 and 200 SMA in that vicinity, but I think 262 is going to be next resistance. I think we're going to get there. Let's go to Russell 2000. and we'll call it a day. Russell 2000, we have this horizontal pivot. This was important support in the past here. You can see that 145 level. Again, a lot of people did get stopped out in this vicinity here in 140, 145-ish. And then this thing going right back up here. So, and you think those people got stopped out here able to go back long here? No, you cannot after this V-shaped move higher, because a lot of people are still wondering, well, are we going to see a retest at 126? So if you go back long here after getting stopped out here and this coming retest lows, you're really losing a whole lot of money by doing that. So they're scared. So they're not going to get stopped out and go back long here. They're not going to do that. So they're gonna wait, and maybe they're looking at about 260-ish or something like that to go back long. Then maybe it's gonna do something like this, and then they're like, oh, this is time to go long, and then finally market pulls back and then do something like that. But I do think that we're gonna come back to about 150, 160. I think we could come back to 160 level, 100 SMA here, 200 SMA there. So those levels is going to have some complication and some slowdown in the short term, but I do think that market could continue to grind higher. And when you look at things on a weekly basis, I think when it's all said and done, you're gonna see this candle continue to grind. Maybe some wicks here and there, continuing higher, potentially to all-time high, to 280s. That's kind of what I'm calling it right now, but we'll see how it plays out. And we'll follow up next week and see how we played out, and we'll see. We'll kind of observe some of these levels, right? We'll observe some of these levels, and we'll go from there, right? You guys enjoy the rest of this Sunday. Thank you for your patience, and we'll talk next week, and also this weekend, and also good luck trading this week.